Hey there! Do you want to know why real estate is a lousy investment? Learn Warren Buffett's thoughts by watching this video. In today's video, we'll be delving into Warren Buffett's perspective on real estate. But before we proceed, we kindly ask all you Luxo lovers to like, comment, and share this video. Also, please subscribe to Luxo-Life for more insightful content. Let's start by getting to know Warren Buffett a bit better. Warren Buffett is a really successful and smart investor. He's known to make millions by investing in different companies and businesses. People look up to him because he's really good at making decisions about where to put his money. Now, let's talk about why his thoughts on real estate are important. Some folks think that real estate is a great way to invest, which means putting your money into something that you hope will grow and give you more money later. But Warren Buffett has a different way of thinking about it, and that's why it's interesting to listen to what he has to say. Let's dig into his thoughts to understand why he might consider real estate a not-so-great investment. By the way, we also have another video about Warren Buffett on the channel. Just search for Luxo-Life Warren Buffett or feel free to explore the channel for more insightful and engaging content. Let's continue by understanding the basics and defining what real estate is. Real estate is basically land along with anything that's built on it. It includes things like houses, buildings, and even the empty land itself. So if you have a house or an apartment, that's real estate. Real estate is also a big piece of land that you own where you might build something in the future. For example, let's say you own a house where you live with your family. That house and the piece of land it's on, that's your real estate. Another example could be a company owning an office building where they do their work. The building and the land it's on, that's their real estate. So, real estate is basically all about land and whatever's on it. Now let's explore Warren Buffett's thoughts on why he considers real estate a less favorable investment option, focusing on the aspect that is not considered a commodity. When Warren Buffett talks about real estate, he emphasizes a key difference. It's not like things we call commodities, which are items like gold, oil, or wheat. These commodities have prices that are agreed upon in markets worldwide. They're sort of like a universal language for trading, but real estate doesn't work the same way. Each piece of land and building is unique. Think of it like comparing apples to oranges. They're both fruit, but each one is distinct in size, taste, and appearance. In the same way, real estate properties differ in location, size, condition, and other features that make them one of a kind. Because real estate isn't a commodity, its value can't be determined as easily as looking at a stock price or a gold bar's value. When you invest in commodities, you're buying something that's traded all over the world and its price is quite clear. But with real estate, there's no universal standard to rely on. This uniqueness makes it harder to quickly figure out how much a property is worth. That's why Warren Buffett highlights the difference. It's one of the reasons he might view real estate as a less appealing investment compared to other options. Now let's focus on his argument that real estate tends to be more accurately priced most of the time. Warren Buffett points out another aspect that sets real estate apart from building on his comparison of real estate to commodities. He talks about how real estate prices are often more stable and predictable than other kinds of investments. When you look at things like stocks, their prices can bounce up and down quickly, sometimes just because people are feeling hopeful or worried. But real estate prices don't usually swing around that much. They're usually based on things that are more solid and concrete, like where the property is located, what shape it's in, and how the real estate market is doing in that area. This predictability can be a good thing because it can offer a sense of security to investors. Imagine you have a piece of real estate, like a house you rent out. The value might not change a lot in a short time, so you're less likely to see sudden big losses. However, there's a flip side to its stability. Since real estate prices don't jump around as much, it might be harder to find properties that are priced much lower than they should be. You know how sometimes you find a great deal at a store just because something is on sale? Buffett's point is that these kinds of amazing deals might be rarer in the real estate world because prices are often more accurate and steady. Considering all these aspects, the uniqueness of real estate, its stability in pricing, Warren Buffett offers insights into why he thinks real estate might not be the best investment choice for everyone. He's not saying it's a bad thing to invest in real estate, but he's sharing his perspective on why he prefers other types of investments. This kind of thinking is what makes Warren Buffett such an interesting figure in the world of finance and investing. Let's continue our exploration of Warren Buffett's perspective on real estate as a less favorable investment and delve into his argument about the challenge of finding assets that are mispriced. Buffett's concern centers on the idea that compared to some other investment options, it can be quite tough to come across real estate properties that are undervalued or mispriced. Think of it like finding a hidden treasure, in this case, a property that's priced lower than it should be. Whether you're shopping for something, sometimes you might spot an item on sale, right? That's because its price is lower than its real value. In investing, this can lead to higher returns when the price eventually catches up to its true worth. But according to Buffett, this sort of opportunity might not be as common in the world of real estate. One reason behind this is the way real estate markets work. When people sell properties, they usually have a good idea of what they're worth. Plus, lots of people are buying and selling real estate all the time, so prices tend to be based on how much someone is willing to pay. This means that properties that are significantly mispriced, meaning priced way lower than they're really worth, might not be as easy to find. In other investment areas like stocks, you might sometimes stumble upon a company stock that's trading below what it's actually worth. But in real estate, due to its unique characteristics and the way transactions happen, might not present these opportunities as frequently. Warren's focus on this type of investing reflects his belief that finding these hidden gem properties, ones that are mispriced, can be more of a challenge in real estate compared to other investment paths. It's not to say that real estate doesn't have its own benefits or that it's not worth considering. Instead, his observations provide a deeper understanding of his investment philosophy and how he thinks about various opportunities in the financial world. Now let's talk about what Warren Buffett says about his own experiences with real estate and why he thinks it's a competitive field. When he talks about his own time in real estate, he mentions that it's like being in a race. Many people and companies are all trying to find good deals in the real estate market. It's like everyone is trying to win a prize by finding properties that can make them money. This makes the world of real estate pretty busy and sometimes hard to find really good opportunities. He also says something interesting. He talks about his company, Berkshire Hathaway, and how it's really good at certain things in some industries. But when it comes to real estate, he doesn't think his company has any special tricks or advantages that give them an upper hand. In other words, in some areas, his company might know things or have connections that help them do better than others. But in real estate, everyone starts from a similar price. There's no special head start for this company. So, when Buffett talks about real estate, he's telling us that it's a busy and competitive world. And even though his company is smart in some areas, real estate is not one where they have any extra advantages. This kind of insight gives us a peek into how he thinks about investing and where he sees challenges and opportunities. Into looking at what Warren Buffett says about real estate, he tells us that real estate is different from regular things like gold. Each piece of land and building is special, which makes it hard to say its exact value. Real estate prices usually don't jump around a lot, which can be good safety, but it might also mean it's not easy to find great deals. He also says his company doesn't have any secret advantages in real estate, even though they're smarter in other areas. All these things show us that real estate is like a busy race where finding good opportunities can be challenging. Buffett's ideas help us see how he thinks about investing in a careful way, considering what's unique, how stable it is, and how hard it might be to find good chances. And that's a wrap, Luxo lovers. We hope you enjoyed diving into Warren Buffett's insights on real estate. If you found this information valuable, give us a thumbs up, leave your thoughts in the comments, and share this video with friends. And hey, if you want more engaging content like this, hit that subscribe button and join the Luxo-Life community. Stay curious and keep learning with us.